I would say that's probably a good thing, because if you look and see what's happening on Wall Street, as you just pointed out, we're probably happy that gold isn't part of that playbook.
Mark, always good to talk gold with you. Welcome back to the Danny Camboni show here at Stansberry.
Well, thanks for having me back, Daniela.
Offline we were talking about gold and how it's really been doing its job, serving as a hedge against turmoil in the equity markets. Yet it still doesn't get a lot of love from Wall Street. So just for the folks at home, I thought it'd be a good way to start this interview with you, Mark, about comparing gold to the Nasdaq and S&P and other things. So you recently tweeted, gold isn't doing as bad as people think. As compared to during the last 6 months, Nasdaq, which is down 29%, S&P down 16%, the Dow 11%, Bitcoin down 47%, bonds 10%, gold really holding on here, right?
Exactly. And to your point, this is nothing new. Wall Street has not been a fan of gold for a long, long time. Gold is not part of the Wall Street playbook. So we shouldn't be surprised by that. And in fact, I would say that's probably a good thing, because if you look and see what's happening on Wall Street, as you just pointed out, we're probably happy that gold isn't part of that playbook. In fact, being out on its own and acting as a hedge, which is really what it is, it's a hedge against all of these other asset classes, is a good thing for investors right now. So I know gold and silver investors are a little bit restless. They expect returns to be higher under these market conditions. But as you pointed out, if you compare it to what else is going on, you're actually doing okay.
Exactly. And just as a side note, I know people will write in saying, oh, you and Mark talk gold all the time. And I just want to say, we talk gold because no one else is. Mainstream media does not cover gold. And I feel we'd be doing a disservice to the folks to not educate the folks out there about, gold as an investment, basically. So you say gold, talking about why gold is not, over $2,000 an ounce, you say gold does adjust to inflation over extended periods of time, but not always in the short term. How come, and why does it take a longer road here?
Yeah, that's something that people tend to forget, is gold is a slow moving animal. It is boring. It is predictable. and that's kind of the beauty of gold. It doesn't react as quickly as our Twitter accounts. It certainly doesn't react as quickly as the stock markets and cryptocurrency. And so people have to be patient with gold. If you look at gold over a long period of time, it adjusts very well to inflation. So if you held, for example, an ounce of gold in 1922, it would buy more or less the same basket of goods and services as you could buy with an ounce of gold in 2022. But in the shorter term, when we're talking 3-6 months, there is sometimes a lag for gold to catch up to inflation. And a perfect example, if you like history,
Yes.
is go back to the mid-1970s and the early 1980s. 1974 to 1978, inflation in the United States was averaging about 8%. So somewhere about where we are right now. Between 1974 and 1978, if you look at that period of time, gold had modest gains in that 4-year period from start to finish. But in the next 4 years, when inflation reached over 10% in the United States, gold exploded. It was up 285% between 78 and 1982. So there's a tendency for gold to lag behind and adjust over a longer period of time. So again, the message to gold and silver investors is be patient and let these metals do their job. They will come through in the end.
So why is silver, you mentioned silver, why is silver lagging behind gold?
That is a good question, one that many analysts are struggling with right now. But my theory is this: we are in the early stages of a very severe market correction. And I think, anyone who wants to deny that at this point can just go back to the numbers that you alluded to and just keep looking at the day-to-day stock market trades. And so what happens with precious metals when there's a severe market correction is they tend to go down. We saw it in 2008. The first 5 weeks of that market correction, gold went down 17%. The first 2 weeks of the COVID market correction, gold went down 10%. We're seeing a similar reaction from gold and silver in this market correction. They are down recently, but that's only temporary. They tend to explode to the upside afterwards as that market correction continues on. So silver right now, what's happening is it's more volatile than gold. It will be down proportionally stronger than gold in a bad market, but it will also rally higher than gold proportionally in a good market. So I would expect for silver investors that their silver will be ticking up very strongly, but they have to be patient with that.
And I know you were just a speaker and a panelist at the Vancouver Resource Investment Conference, Mark. And what was the sentiment there? What were you hearing? I mean, this is a conference generally, focused on the precious metal space. I mean, were people optimistic?
The general theme, Daniela, was that people are pretty optimistic about the commodity space in general, the resource space. So not only gold and silver, but some of the rare metals, even some of the more common metals. A lot of potential for Canada and other countries that are strong in the mining space to step in where we're going to see some pretty severe disruptions out of the Ukraine, out of Russia, out of other countries that tend to export a lot of natural resources. There are going to be interruptions there. There already are interruptions due to the war. So a lot of potential for the Canadian market to step in. That's one of the themes that we saw and we talked about. And obviously the inflation question is on everybody's mind, and how is that going to continue to impact the market?
Yeah, and on that point, just want to bring up, Bitcoin versus gold here, because a lot of folks were curious to see how both would perform during this inflationary time. I mean, do you think we can clearly make the thesis now that Bitcoin is still too young to combat inflation and gold's the winner here?
I think so. I mean, it's so young that it's hard to say what it is still. I think we're all still learning how Bitcoin reacts, but right now it looks like a tech stock more than a hedge against the equities markets, that's for sure. I mean, it is the worst performing asset class, and Bitcoin is doing better than some of its colleagues out there. There are certain coins now and tokens that have lost 95, 99% of their value in the last 30 days.
Yep.
So I don't know if Bitcoin has to reinvent itself. That's probably a strong word to use, but investors need to figure out how they can use Bitcoin effectively in their portfolio, not only to earn returns, which it obviously can in a good market, but how to position it in their portfolio in a bad market. Because if you've been holding Bitcoin over the last 6 months, it's really not doing you any favors at all.